Hi, and welcome to this simple analysis of Schibsted. So, what is Schibsted actually? Well, Schibsted is a Norwegian company. It is placed a little bit over Scandinavia and even some in Spain. They are focusing on marketplaces, so Finn.no, Blocket, even eBay. Have something to say there? Well, not necessarily eBay, because they own a big part of Adevinta, which again owns eBay. But it is a very big part of their portfolio, and it is very visible on their evaluation. Another thing that they're focusing on is news. So they are, for example, Aftenposten and VG. They also have news in other countries, like, for example, Spain, and they struggle a little bit more on getting earnings on it, but at the same time, they are big. And in Scandinavia, they have like 80% of the population is looking at their products. So they are also what you could call a startup generator. So basically, what I mean with that is Schibsted is actually buying up a lot of up-and-coming companies that are looking to be taking like one of those more interesting stars, like possibly bright idea, possibly can make a change. They buy them up, they help them with money, and they help them build up. It doesn't seem like they have gotten too much from it right now, but at least that is one of the things you see if you go deeper into it and you see what they own. For example, one of the companies is Tibber, which was a very big thing a few years ago, or last year I think, but they have done some controversial things last year, which, created a little bit of negativity towards them. So how was 2022 for Schibsted? Well, you can see that it was quite fall, like from 350 NOK approximately to, 150. Well, it's Adevinta again. So impairments have gone up. It was around 20,000, 22,000, I think. And that is quite a lot of money. And this is based on evaluations in Adevinta. So they are, like, their statement is very, how can you say it, ugly lately. They also struggle to get those results. So 2022 was, from my perspective, disappointing. They were able to grow a little bit with the digital subscription, but when it comes to actual earning, they weren't able to improve that. They have also now, for the second time in a row, shown that they are quite reactive to slowdowns. So when the market is doing worse, it seems like Schibsted is as well. So it's not a defensive company. And also when you add in the general financial growth of the company, honestly, it looks a little bit disappointing. They have also had a marketplace growth. Not by a lot, but they were able to keep up some growth even though their margins were doing worse. At least it's something, and if this place is getting better, they might be able to remove some of their losses in the end. They have worked quite a lot as well on their cost control, and this is why their news area didn't do worse than what they did. It was actually quite disappointing. So their news media is basically at a standstill since Q4 2020. So I'm not really sold on that one. When it comes to their digital subscribers, they have managed to increase it with 8%. And yeah, I actually do like how this is set up with them. Like, they have a very big portfolio. If you have connection to one, you will have connection to all of them. You will be able to see from different sources, and that is actually really beneficial. It provides a very good incentive to give them this ARR. Honestly though, when it comes to their statement, I'm not sold. Their revenue have increased from, basically 15,000 to, basically 15,000. This is 8 years of growth. Like, they're not doing a great job. They have a weak EBIT. You never know what you get. Sometimes it's doing good, sometimes it's doing bad, sometimes it's doing literally horrible. With the impairments, that is fair enough. Like, you can't go in and just... When it comes to 21 and 22, it's like you can look a little bit away from those numbers. This is evaluation in Adevinta, so this is just that Adevinta is taking so much space in their statement, so it destroys it a little bit. But you can see the impairments on the right side of the screen. It's still not that great. They have unstable margins. It looked like you just don't know what you're going to get. One year they might be giving you a 12%, the next year they will give you 4%. And when it comes to the margins, honestly, I would say they are unstable as well. You just don't know if it will be good or bad next year. Every second year is plus minus 3% at least. So it's something fundamentally wrong here, economically at least. I don't really like it too much. And their results are weak. And honestly, like, the results are also weak. It's okay, they have improved it quite a lot since 2014, minus 127. It really makes me stress, I guess you can say. It's like, I just don't like this statement. It's too unstable and it's not giving enough back to the shareholders. Going directly into it, I would just say that it's in general a bad statement. When it comes to the balance, they have increased their debt, they have increased their leases since 2014. It's not too much positivity there either. Their liabilities are increased, and the fact that they're not increasing their revenue, kind of a bad sign. But at least they are actually paying down debt from time to time, so they have managed to improve their equity quite a lot. Even if their statement doesn't show it, you can see that assets are increasing. Just notice the exceptional year 2021. When it comes to their cash, you can see that they always have a lot of cash at hand. I like that. It provides a lot of security in it, and due to that, I would actually say that this is an acceptable balance. I'm not too fan of what they're able to get from the debt they take, but it might be that I'm complaining too early. So I will say that the balance is at least acceptable. When it comes to the cash flow, though, I would say their operation is unstable. Yeah, from 900 to 2,800. You just don't know when it's good or when it's bad. The trend in 2022 is bad. Trend since 2019 is bad. They didn't do too well in COVID, so that is fair enough. I'm struggling enjoying these numbers. They're providing low dividends. Honestly, it's not that bad, but due to the high evaluation, it's experienced as very bad. 1% dividend for a company that doesn't really grow. They have increased it quite a lot since 2014. They have also kept up doing a lot of investments during this time, which in itself is kind of good. They want to grow the company, they want to do well in that way, but I don't really feel like it's translating that well into getting money in. Honestly, I don't feel like they're doing too good of a job. Their finance flow is also quite variable, so you can see that some years they are paying down, other years they're taking up debt, but at the same time, like with all the investments here, that is quite reasonable. I would, though, like to say that for me, this is not a good cash flow. I'm struggling a lot with this company's economics. I feel like they're unstable. I feel like I don't know if I will be joining in a good year or a bad year. And yeah, I struggle finding an incentive to actually like them, at least when it comes to their actual finances. And when it comes to the downsides, it's basically slow to no actual growth in the stock. Since 2014, revenue have grown with less than 2%, I think. The dividend is not even going to cover the tax in Norway. That is now over 1.1%. Since the dividend is actually at 1%, it's super low. And since it's no real growth, I don't feel like it's anything to even have, or they would need to start giving out more dividend from that cash flow they have. It's easier to get too focused on the asset value of the company. Honestly, I do like the asset value. I do love that you have a lot more assets in the company than you have in debt. I like that you have more safety in it. I like the cash. I like these kind of things are good, but when they're not earning money, it's something fundamentally wrong there. I will call it a downside, since it's no point with a lot of assets if you just can't create actual value to the shareholders. They have a low EBIT, they have low margins, they have unstable margins. They might have something to work on there. A lot of the money is just flowing out, and it seems like they're not really able to build it up or improve it too much. And they're also a little bit too exposed to Adevinta. So when their revenue is lower than the impairment that is happening with Adevinta, something is a little bit sketchy. Of course, it just means that Adevinta have a lot of asset value. Schibsted. And when it comes to the benefits, they have, for example, good products. Like, now I'm not that familiar with the products outside, for example, like Blocket or those kind of things. But they do have Finn.no in Norway, which I'm familiar with, and they have VG, E24, and also Aftenposten as examples. These are all brand names, which is very well known around in Norway, so I do like that. They also have that high value from assets, so that makes the debt level in the company a little bit less scary. But of course, when they barely earn any money after EBIT, it's not like it's that easy to handle the debt anyways. Possible realization value. A lot of these companies, good brand names, might have realization value if Schibsted figure out that they might want to do something like that. And Blocket is number one in Sweden, so it is some value there that they might be able to realize if they struggle to get out the earnings that perhaps they deserve. I do believe that Schibsted can improve. It looks like they're good at finding these companies that doesn't really earn money but might become something in the future. So it might be that I'm judging Schibsted a little bit too early from my point of view. I'm always quite focused on the past and what is currently happening, not necessarily so much about the future. And they are good brand builders. Of course, they have a lot of data, they have a lot of information to provide from each user. So this is something that they can use and improve their own products from. And here you can see basically what they are. Is like you can see that they're more or less first place on almost everything, right? They're doing quite a good job. So this is just based on Finn, Blocket, DBA, Bilbasen, Tori, and Oikotia. The general thought is like first place. Like they're really good at building up something. And just based on that, I'm very positive. I use Finn for a lot myself. So where is Schibsted going forward? I think that they will continue struggling a little bit with the news division. It's a big change going from newspaper to actual ARR, getting the money online versus hand-on newspaper, especially since the older generation is still like struggling to do the change, not really sure what they want. I also hope that there will be some Adevinta changes, but it is a little bit difficult to know what to expect here. Honestly, I would want that they would be realizing some actual value from them, but at the same time, when they have already impaired over 40,000, perhaps we should hope that it will increase a little bit in value first. TNB mentioned that it might be some growth from 2024. Well, we will have to wait a year to see that. And well, based on COVID and these kind of things, Schibsted doesn't do the greatest during downturns. Perhaps people just don't want to pay that much for it during those kind of times. So, well, we'll see. Perhaps they will be able to, and it will be good for them. I'm not too pleased with their finances, and if they are able to change it, I would be willing to change the fair value. That I've put at 80. So the reason I put it at 80 is, in general, I actually really don't like Schibsted's finances. I think that they have been doing a generally bad job over time. The only value that I see in the company is assets. They can realize a lot of value. It's just they actually don't. So you stand there with a company that doesn't really earn any money and gives almost no dividend, and will probably not give too much dividend even if you buy today or tomorrow. Yeah, they just really need to prove me wrong. Honestly, I hope that they do. It's like nothing is better when a company can start doing better, because then I have another place to get in and diversify from. And other than that though, here is a disclaimer. This is not a financial advice for you to actually buy or sell Schibsted. It is just me telling you my thoughts about the company, hopefully giving you a second opinion. Cheers!